Let's say your Chinese company buys goods in China. Since it's a local trade, you pay VAT on top of the price, 13%. Then you export those goods. Can you get the VAT back? Yes, but you need to follow the rules. Here is how it works, step by step. First, you buy the goods, and your supplier issues a special VAT fapiao. This is not just any invoice, but a proper VAT invoice. Those are issued by the government and used for inland operations. This fapiao must match your declared HS code, customs declaration, your export documents, invoice, contract, packing list, and your company business scope and activity. Then, step 2, you export the goods. That means customs declaration with correct numbers, product codes, and your company as an exporter. Alright, your goods are exported. Then step 3, you apply for VAT refund. You submit all the documents to your local tax bureau. They review it, and if everything is okay, you get a refund back to your company account. And the good news here is that refund money is not taxable. Sounds simple? Not really, because to even apply for a refund, your company must pass real checks. The tax bureau will want to see real office, not just a virtual address, minimum 20-30 square meters in most cities, history of real operations, real staff on payroll, social insurance contributions, monthly filings, proper accounting. This is crucial. It means that if you want to get a VAT back, your Chinese company must have substance. It wasn't always like that, but now it is. Now let's talk about the amount. Sometimes you don't get all the VAT back. China has refund rates, and they depend on your product category. There are science-intensive and high-margin goods. Those China wants to promote exporting. For them, you'll get the full 13%. There are some chemicals and materials that you'll refund nothing, and there are goods in between that you can refund partially. Feel free to stop the video for more details. What does this mean in practice? Two things. First, choosing the right HS code, your product category, is critical. And second, before building your business on VAT refund, consult with accountants. Building a business on VAT refund is a controversial idea in general. I will cover why later in this video. So, what happens if something is wrong? No refund, or delayed refund, or you get flagged for audit, and all your future refunds will be questioned. About timing. If you do everything right, your first VAT refund will still take from 6 to 9 months. That means you already paid VAT money, wait 6 to 9 months, and only then get it back. If you get approved, the next time it will be 1 to 3 months. That means that if you work with VAT and export, then some of your funds will always be frozen in VAT, paid, but not yet refunded. Now let's talk about your suppliers. A lot of people who do business with China never even heard about this Chinese VAT. This is because in most cases they already buy on FOB terms or similar to FOB. Basically, it means that they buy a product that is already exported by a Chinese supplier. If this is your situation and you tell your supplier then tomorrow you'll buy with your Chinese company inside China, they will increase the price. They may increase it by 13% or 10% or 7%, depends on their export margin or whether the product receives only partial refund. The most interesting case is when they tell you that the price will be the same. Then you must go deeper and understand why. Is it because this category of goods can't do refund? Or because your supplier doesn't work with VAT? Or because their margin is huge, so they get profits plus 13% VAT? Or because the volumes are not enough, so it just doesn't make sense to refund? Or because your country is under sanctions and Chinese cannot export it legally? Depending on your answer, this will show you how much margin you lose on this stage. But in general, finding an export company in China is easy. Competition is high. Their services cost from 1 to 3% depending on your volume and product. Sometimes more if you need to use their funds, but still it's not much unless you have huge volumes. This brings us to the main idea of this video. If your whole business idea is about refunding VAT, then it's probably not gonna work. There is a whole bunch of Chinese exporters who understand it better and can do it cheaper. But if your business needs a substance in China, as I said, people, office, manufacturing, R&D, then export VAT will be a good source of additional income for you. Final thoughts. VAT refunds in China are not that easy. You need to have a substance, do everything right with documents, prepare to freeze funds for several months, make sure your product fit, make sure your suppliers fit, and above all, make sure it is not the entire idea of your business. In the next video, we will cover how and when you can pay dividends from your Chinese company, how the process works, how much taxes does it cost, how it may change depending on your country, and why you might not need to pay dividends. Subscribe to stay updated, send this video to someone who does export from China, and let's keep going.